First of all, we should acknowledge it's really quite stunning that the pace at which the discussion among central banks and at the BIS has moved from being quite uncomfortable with any form of CBDC and even with crypto assets, and then moving quite quickly over the past few years, first looking pretty closely at wholesale, now looking toward retail.
But on the retail side, I'm not surprised at the number of projects at all. I think that we have a significant amount of work to do before any of these retail projects become something that's feasible. And a lot of the challenges on the technology, on the governance, on the legal side, really lie in the retail realm. This is the golden use case that people have been looking for. So I expect to see a lot more work being done on the retail side.
What are you going to outsource with the CBDC? So I think if you're looking at something that's programmable or there is technology embedded in it, I find it hard to see that the central bank would be able to outsource and take the reputational risk. At the same time, as we're discussing, there are some huge operational challenges, particularly on the retail side.
It was a very positive development, I think, to see the paper that was published by BIS together with Bank of England, the Swedish Central Bank, ECB, Bank of Japan, the Fed, and also, I think I'm missing one. I thought that was a very positive move in terms of having a common view across all those institutions, in terms of laying down some foundational ground rules, if you like, in terms of what they see collectively as being the future of CBDC.
If you compare like for like, you could really ask the question, why bother? But if you think about, you may be enabling now a market or a payment capability in markets or areas where they're not really used yet or they don't really exist, then I think it's quite powerful. So that's for me always the real interesting aspect. You would almost need to imagine using this for use cases that we haven't really experienced yet.
Both. I think that you'll see some programmability right at the network layer, and that will be central bank defined. But I do think that they'll also design for programmability at the application layer so that payment service providers can offer unique and value-add payments types to their clients.
So until now, everything that we talk about when we talk about digital money is all account-based. And when you think about how accounts connect to each other, they need to connect to each other. So if you're talking about a reality where we have n players, you're talking about an exponential number of connections that need to happen between them. Because for me to connect to you, I need to link my account with your account, and we get into the whole correspondent model. Tokenized assets offer a slightly different value proposition that fundamentally changes that narrative. And the notion is, as a bearer asset, I need only to interact with the asset itself and not the system from which it came from. So very similar to doing a payment versus payment for dollars against euros. If I hand you $100 bill and you hand me 100 euros and it's one-to-one for whatever reason, I mean, I need not interact with the system that issued these currencies. I only need to be able to custody the cash. And I think it's very, very analogous to that when we think about tokenized value and how central banks can coordinate and how we can offer, is there need for hegemonic currency, or is this kind of tokenized bearer asset model the technology breakthrough that will enable us to focus first and foremost on our domestic environment, knowing that when the time comes to interconnect, we don't need this exponential n squared problem. Rather, we can just say, this is my token, it's a bearer asset, and if you can custody it, you can make a claim against its liability. So I think it fundamentally shifts our perspective.
What the central bank is doing is they're harnessing, or they're burdening the cost of running this network so that payment service providers can come in and just provide the customer support, unique value-added services in the context of payments, and basically to handle their customers and to provide that value. So instead of, whereas in the past, they would have to maintain the ledger, they would have to process and settle transactions, they would have to have correspondent banking. Now, if they can integrate into one or more CBDC networks, they all of a sudden are able to run a payments business with much less operational and technological burden. It's a lot more than just a technology product. These institutions are wrapping their heads around the organizational change that will take place and all the different elements that they will have to manage and what stakeholders are truly required to execute on a retail level CBDC project.
We need to think about the future of our economy, in a much longer, with a much longer time horizon. So what's our economy going to be in 5 years, in 10 years, in 15 years, in 25 years, which is the average lifespan of some of the financial infrastructure projects that we're working on. And in that sense, we heard about micropayments, we heard a little bit of IoT devices, things like that. The economy as we know it will not just be agents that are people. It will be agents that are IoT devices, sometimes algorithms within digital environments that don't necessitate a device, and the borders that we have on traditional payment structures don't really exist in the digital space. So when we think about the ability to move to transfer value independently of space and time, I think that is the value proposition that CBDCs and tokenized assets enable us. Because we're not adding another layer to an existing infrastructure, we are really rethinking the base and the core. So I feel excited, very much in a way that we're looking at the first version of the iPhone, sitting here, postulating on what can we do with this new incredible device. Not even, those unknowns are a huge area of our space, and nobody could imagine what the impact of smartphones have done on our society when Steve Jobs first came up on stage and waved that little device. And here, less than 10 years later, look at where we are. And I think that we're going to be in a very, very similar situation with digital currencies, be it central bank digital currencies or stable coins or digital assets at large.
Wow, there's a lot of work ahead of us to make that excitement a reality.
Thank you for joining us. You can find this discussion on www.futureoffinance.biz and indeed other planned webinars under current events. I am Wendy Gallagher. If you would like more information about how to work with us, please do email on wendy.gallagher@futureoffinance.biz. Thank you once again.